our next panel is going to talk about the geopolitics of mining. We know it went from the hash rate went from China to U.S. and does that pose a threat to the decentralization thesis of it? To explore that, we have Nishant Sharma from BlocksBridge Consulting, along with Ethan Vera of Luxor, Christopher Manzano from Bitmain, and Jameson Nunney of Compass.
Hello, everyone. Thanks for coming to this session. Our session is called Decentralized or Re-centralized. First of all, I'll start with a short introduction of myself and then give the stage to other panelists. My name is Nishant Sharma. I represent BlocksBridge Consulting. We are a communication strategy firm focused on the mining industry. We've been doing it for a few years now. We specialize in the mining industry, so we provide contextual knowledge and background to our customers to make their communications more in line with their business goals.
Yeah, hello everybody. Thank you for having us at this great event. My name is Jameson Nunney. I'm the Chief Product Officer at Compass Mining. We believe we have the most robust platform in mining, and we serve retail, large businesses, institutions to help them mine Bitcoin. We have a marketplace where you can buy and sell units, and we also host in 30 facilities around the globe. We have around 10,000 customers now, sold 60,000 machines, 80 megawatts online. We're very proud of last year and into this year's success and into the future.
Great. Good to see everyone turning out to a proof of work discussion and a largely proof of stake conference. So it's good to see you guys on the good side of the force here. My name is Ethan. For those of you who don't know me, I'm the co-founder and CEO of Luxor. We are a mining software services business. We work with around 3,500 miners globally. While predominantly focused in the United States and Canada, we are trying to expand around the world. We currently work with miners in over 50 different countries on all major continents. So this topic in particular is quite interesting to us and one that we take to heart. So yeah, excited to be here.
Hi everyone, my name is Chris Manzano. I'm with Bitmain. We are the world's largest provider of Bitcoin miners. We're the creator of the Antminer series, and we're currently working on ways to mine in environments all over the world with our new Hydro Miner series.
All right, thanks guys. Our topic includes the word re-centralized. There's a reason for that because 2 years ago, or even less than that, about 1.5 years ago, most of the world's Bitcoin mining happened in China. And then the Chinese government banned it, and then it moved elsewhere. A big portion of it is in the US now. And so many would argue that it just was centralized in another place, and now it's re-centralized in the US. Which brings me to the first topic that I would like to discuss with you guys. What do you guys think about centralization in North America? Is that even a thing? Is this something to worry about? Is it of the same scale as it was in China 2 years ago? What do you think, James?
Yeah, so our company is here to democratize Bitcoin mining. So we are excited about miners wherever they want to go. Obviously, with the ban moving miners from China to the US, the US is a great, in most places, a great place for miners. There's capital readily available. There is cheap energy prices, and the political environment largely has been, a fertile place for miners to prop up. Certainly, with access to capital markets, large players have taken advantage of that at near zero cost and on the public markets and centralized potentially, more so in Texas and other places. But, I'm not largely worried about that. I think we're starting to see people move into other countries to diversify their footprint. People say miners are like cockroaches, and they'll go to wherever there's cheap power, strong political environment, and access to capital.
Or else the wife's going to be happy.
What do you think, Ethan?
Yeah, I'm going to disagree with this one. But what I think makes Bitcoin so unique is that this L1 really focuses on decentralization. I mean, we're talking about it on the panel here today. Not a lot of L1s are focused like on who's staking their coin and whatnot. So I do really appreciate the level of attention this gets. In January, Cambridge reported about 71 exahash in the United States, which at the time was just under 40% of the network hash rate. There's some errors in that methodology, but I think it largely points to the trend that there is a growing amount of hash rate in North America, and specifically the United States, and that's grown significantly over the past year. Based on what I see as projected build-outs, we'll be over 50% in the United States by end of year, probably pushing 60% by next year. And to me, that's very worrisome. Although we're a US-based company and we're working with companies here, I think it's critical that the Bitcoin network and the miners do everything in their effort to decentralize from single point of failures, whether that's a single company, a single pool, a single country, a single state. We need to work to really kind of make sure there's no points of failure. And so what we've seen largely in the United States has been really good capital markets that have drawn people here, and a really good regulation and environment to mine Bitcoin. It's by far the best country to mine in the world. Largely due to different advocacy groups, like in Texas here, we have Texas Blockchain Council that's pushed forward regulation, met with politicians, really cemented Bitcoin mining in the fabric of this state. And we need to see that type of work being done in everyone here's home countries and states. So setting up advocacy, talking to politicians, and really promoting Bitcoin and Bitcoin mining in those jurisdictions. So that's an area we're going to focus on. And I do think it's a threat to the network how much hash rate is in the United States.
Thanks for letting us know that. What do you think, Chris?
So those were both very, very, very good points. I don't think I could give a better kind of summary or overview of what Bitcoin miners are looking for when they're trying to find energy in a good stable environment. But I think that one of the things that we can look at is that decentralization isn't just your location. It's also about the ownership structure of who owns the mines, who owns the miners. So we have companies like Compass that are decentralizing among their client base. So you have actual regular consumers that are having access to miners, and those miners are theirs. It's not like Compass can say I'm just saying those miners are theirs. So they're under, and that's something that's really important. You also have public companies. Public companies, I mean, technically they're public. So even though the assets are in the company, it's also a form of decentralization. But as a company, I think everyone really wants mining to spread out into as many areas as possible, and that's a good idea. We've seen time and again that when things get centralized too much or too many, there's a lot of mining in one particular location. It's just, you never know how things can change and what can happen.
I guess one other thing to play on, just to play off Ethan's point, the ownership structure is incredibly important. And like you said, the large miners may be a target, but in order for it to be a true threat, they would all have to be coursed at the same time. So you have home miners, which may not make up a large percent in the US necessarily. Then you have kind of off-grid. You've got the Barefoots and the Cathedra, maybe not necessarily in the US. And then you have Compass kind of in between, and it's all the leverage points that are slightly different in order to coordinate that type of an attack. So that's why I'm not overly worried. It's definitely a concern, though.
So is it correct to say that even if a lot of the mining is in one jurisdiction, it is still not so centralized as long as it's diverse enough with different ownerships?
Yeah, and the other piece is we've talked about the large miners. Yeah, I think they're doing a fantastic job of engaging with local politics and their separate city that they're operating in. Chad Harris is building out ballparks for the baseball teams where they operate and getting involved in local regulation, and then certainly responding to DR events, load curtailment. I think we could certainly see more of that, and it's likely their responsibility to solidify their place because a lot of the FUD is certainly around energy. And so it's not just how many kilowatt hours you use, it's the kilowatts and when they're used. And so I think that's the point that's missed on most of the mainstream media.
Adding on to that, if there was one country in the world that I think it'd be okay to have 50%, it'd probably be the United States because of the rule of law here. So even when we saw what happened in New York a couple of weeks ago, that is affecting like new miners rather than old miners. And so there's a lot of countries out there that I'd be more worried about where they can make a decision overnight and suddenly turn over all the miners. Obviously, we're much more comfortable here based in state and federal law that our businesses aren't going to be seized. But still, just in the nature of decentralization and the narrative for Bitcoin, I think it's good.
Cool. That summarizes the panel's opinion on this. There's also the concern or a debate around whether you can even ban it. Because China's banned it very hard this time, and still it's re-emerged there according to Cambridge's latest data, which can be debated because there's a way that they gathered the data, and that can be debated. But it does show that there is some percentage of mining which is happening, even though it's illegal there. So what do you guys think on that? Can mining even be banned?
I would relate it to any other illegal industry. Certainly when you make something illegal and you have either monetary or criminal punishments for it, it definitely discourages the use of it. It's hard to take it all away. I mean, we see that with drugs, right? It's impossible to take them away no matter how much you try and ban them. And so in some degrees, I think mining would still take place, but it wouldn't happen to the degree it does now. A large part of why so much mining is taking place in the United States is because capital markets are open to them. If you banned it, then you take away that aspect, and if the capital dries up, then a lot of that mining activity will also dry up. So in markets like this, having a ban would significantly impact the amount of hash rate. It may not take all of it offline. There may be some home miners or off-grid miners that continue on, but the large miners definitely would have a hard time dealing with that.
I see all the investment coming into the space. Larger and larger companies are pouring capital here, and the more adoption on those types of entities that take place, the more politically involved they're going to be, the more they're talking with their state representatives. It's going to be hard unless there's a outright executive order, for them to move things. In the US, for better or for worse, things take forever and are often done incorrectly, but the more time that mining exists, the harder it's going to be to ban.
That's a very valid point. We've talked about centralization repeatedly here. Do you think that proof of stake is a solution to the centralization problems or centralization issues that people or critics point out in proof of work?
No. Ethan?
And if you think that way, why do you think that is?
There's a lot of topics to unpack here. One of the common themes I like to speak to, especially because I run a mining pool, so the pool side of the industry is quite important and dear to heart to me, is the difference between proof of stake, proof of work. In proof of work, you use your ASIC, your mining machine, and you configure its stratum to point to a pool. At any point in time, if you have physical possession of your machine, you can walk up to it and configure it to a different pool or a different entity. Whereas with a lot of proof of stake, and we still haven't seen a lot of decentralized staking pools take off, you have to go ask permission for the staking pool before you change providers. So if you're staking with, I don't know, a Kraken or a Coinbase, you need to go ask them permission. So inherently, proof of work is a permissionless system, whereas proof of stake is permission when it comes to the pooling of it, and that will naturally lead to a higher centralization risk amongst pools. So that's just one topic of many, but obviously we're on stage here today because we believe in proof of work and we think it's the future for truly decentralized networks.
Yeah, I think it's more or less a copy-paste of the existing system where the people who have all the capital have the power and the voting rights, and that's not the future that certainly us at Compass are building towards.
And do you have any opinion to share on proof of work versus proof of stake?
Yes,
Chris?
personally, I'm for proof of work, but I think that when there's a good enough solution, when people find the right, like the way that works best, people are going to go in that direction. So if there was a proof of stake that was better better employed, or it solved all the security issues and it answered all the questions, and maybe that's something to consider, but I don't think we're there yet.
Cool. Now that mining was banned in the in China, as the panel pointed out, it's maybe 50% already in the US and maybe will go up to 60% by end of the year, but it will not be to the scale that it was before the bans in China. Like, it was a big portion of it in China, which is not the case right now with the US. So when that happens, which other parts of the world do you think mining will reemerge, or which other parts of the world mining is already emerging? I'm sure Compass has operations in different areas, same like others on the panel, like Bitmain must have customers in other areas, same with Luxor COO. Would love to hear more about which other geographies are of interest that maybe we didn't think about.
Yeah, certainly. We do have 30 locations. Most of them are largely in North America, so Canada and the US, because of all the same reasons we discussed earlier. But we have facilities, let's say in Iceland and other countries. That's a hydro facility. Customers are wanting a diversified set of locations where they can house miners for the kind of concerns that we've talked about here, and that we're happy to serve those customers. We definitely see South America coming into the picture for a lot of reasons. They have energy resources that are rich. They are starting to sniff around Bitcoin. And folks in the US, large miners, are also trying to diversify. So it'll happen gradually, and I think probably in 2023 we're going to see a bunch pop up in places like Paraguay and others. So,
what do you think, Ethan?
I see like the big three outside North America right now is China, Kazakhstan, Russia, and so those were kind of like the giants in mining outside of North America. I think they'll continue to be an important part of the industry, although I think their growth will definitely be less than it once was, mostly because their access to capital markets. Russia definitely punches above its weight class in terms of political power and just media attention, but at the end of the day, its GDP is less than Canada, and it has 3 times as much population. And so without access to capital markets, with a new wave of sanctions, I can't see that much growth happening in the region. Whereas there's 3 other main regions that we're really excited about. First is the Middle East. So with the development of immersion cooling, hydro technology, like the new product from Bitmain, I think it's going to really enable a lot of growth there to capitalize on how much access to capital they have and abundant, cheap power. So that's an area that we're excited about, and I think there's probably a couple dozen mining companies that are knocking on the door of every sovereign wealth fund in that part of the world, asking them for partnership, and many of them are going to be successful. The next part is Northern Europe, so Iceland, Sweden, Norway. We think that's a really interesting location, especially on the areas where they have stranded energy, oftentimes renewable too, so it's good, cheap power with good regulation and governments. Where I think there could be some risk there is when transmission lines are built, and we saw that with Norway a couple months ago. Southern Norway built some transmission lines with mainland Europe, and then with the spike in demand in Europe, then so did electricity prices, and a lot of miners in southern Norway had a hard time. So the miners that can find good stranded power in those countries, I think, are going to do well. And then lastly is Latin America, which is dear to my heart too. So we're also very bullish on Latin America. Paraguay, obviously, with their hydropower there. It's the second biggest dam in the world after the 3 gorges in China. Other areas too, I know no one really loves talking about it, but Venezuela is an exciting area. We'll see how the government reacts there, but obviously a lot of retail miners there buying one S9 and supporting a family off of, which is a really good story for Bitcoin. So would love to see them still accumulate S9s, and really Luxor is like focused on expanding globally and helping these companies grow. And I think a large part of them being stunted until now is access to capital. If you look at one of the biggest trends in the past 2 years, it's been ASIC financing. Companies operating in these jurisdictions don't have access to that because no one really is familiar with the regulation and comfortable with it. And so we're actively helping educate financiers and investors and helping share as much data as we can on the region to get more capital in. So yeah, those are the areas we think are exciting.
And I think that mining normally goes where the conditions are right. And in the past few months, we've seen conditions developing, especially in Latin America, where infrastructure is being built up. Many companies are going to places like Paraguay, Argentina, Chile, and also we have technology developing. So we have the hydro solutions from our company that are allowing you to mine in different environments. Before, no one really would have thought to have miners in the Middle East. But I think that going forward, the Middle East and Latin America are going to be some of the most exciting places to have mining happening. And you're going to see it happening on a large scale, especially in the Middle East. And in Latin America, I'm personally excited to kind of have a chance to go down there and explore and see what everybody's working on, even in places like Costa Rica, you know, beautiful countries, clean energy being developed there. And I think that once you have the electrical infrastructure in place, a lot more miners are going to go there.
That's a good point that you also touched on, which is as more new technologies come in, like liquid cooling, it enables mining in regions where it wasn't possible previously at the time when China used to dominate mining. Another point that the panel touched on, and I want to go back to, is that even if it's being centralized in the US, it's not going to be and is not of the same scale that it was when it was centralized in China. And if it does happen to be of the same scale, is it an equal worry?
Well,
should we be worried as much as we were when it was so centralized in China?
I kind of touched on this a bit earlier, but I think the dynamics between state and federal in the United States is just much different than it is in China. So, like, for example, here in Texas, very supportive environment of Bitcoin mining, politicians are on board. I think there's a very low threat of anything badly happening in this jurisdiction. So I would say the federal risk in the United States is much lower than a jurisdiction that has a stronger federal government like China.
Yeah, I think if anything, we'll see kind of rogue pockets or, you know, many different paper cut wounds. Certainly, you know, New York is a topic of conversation. You know, they're doing their very best to become the #1 spot, the state of the union to most deter the businesses of the future, which is unfortunate. It is a 2-year halt on new mining, and that hasn't been signed yet, but I don't know that they have a beat on this, but I would assume, you know, many businesses are going to be extremely reluctant to invest in that state because they put forward this type of legislation or regulation that is, it's a deterrent. So other things that can be a paper cut are, you know, increased taxes in certain regions or cities, changing utility tariffs specifically for those tariffs, meaning rate classes or how you're charged at your utility, whether it's a throughput, demand charge.
And that's already happened in some jurisdictions.
It has.
Kazakhstan, Iran.
Yep. And so, but to my point earlier, I think the more of these larger companies that have invested very heavily in the U.S. Are going to secure their position and de-risk by you know, having political activism and showing and educating that mining is actually a grid stabilizer. You know, you can put containers next to a new generation site to provide demand response. You know, you can't just add a bunch of solar and wind to the grid because it's intermittent. And you know, if you have miners next to a generation facility, you can have intermittent demand, which really does stabilize the grid and lower the levelized cost of energy. So it's you have to peel the onion back a couple layers and really get the picture before you can make a decision and just say you're using a lot of energy. It's actually going to be a net positive in the future. It's just going to take some time. You see Exxon starting to dip their toe in.
The fact that you can have these dialogues with regulators alone makes it very different than in China, where the government, without having any such dialogue, just banned it overnight, almost overnight.
And just jumping in here too, like all of these risks we talk about are largely like company and operational risks. Like they hurt your bottom line as a company, but they're not really a risk to the network. For example, like the New York ban or Washington State last week hiked up electricity rates in one of their counties. That hurts individual businesses, but it's not a threat to the network. I think we really don't need to start worrying too much about a nation-state attack on Bitcoin network at the current stage. As much as we're all enthusiasts here, like Bitcoin is still a relatively small drop in the bucket of the overall economy, and so until Bitcoin really starts going head-to-head with the U.S. dollar, I don't think it's going to be, a risk from a state attack perspective.
That's a strong point to end this panel on. And thanks everyone for coming. Thank you for the panelists being here.